Hi guys, have a nice weekend. Happy Diwali to everybody. We just had the Diwali in the last few days. Hope you had a great celebration. It's a festival of light. Hope the bright things out there to come in your life and in your financial wealth. Had a great time with my friends and families last weekend. And now let's look at the stocks and stock market, how it has done. It's done incredibly well. So we have been increasingly going up on the market, which has led to most of the major indices a bit extended. Some of the stocks are having parabolic moves, which is a cause for concern in terms of if you're on the stock, you need to be managing the right risk management so that you book some profits, adjust some stop loss, and look at the stocks that aren't extended and about to break out to have the right risk reward ratio in your favor. Let's look at how the stocks have performed. Let me share the screen with you in a second. Right, so this is the put call ratio. Right now it is at 0.86, and it is in between the green and the red zone. So it's not extremely bullish, not extremely bearish, according to the put call ratio. It's in the neutral zone. Moving on, let me change the chart pattern to the candlestick so it makes a bit more sense to us, and add in the indicators. So this is the weekly S&P 500 index. It's at all-time high, and it had consecutive 5 weeks of bullish action since it touched the 21-week moving average on the daily. As you can see there, it gave a gap up on Friday and a doji symbol, and it's pretty much went up straight from this bottom here, and the market doesn't go up all the time consistently, so it is ripe for some pullback in the next week or so. But it gave a dodgy gap up on the overbought position. Is quite an indication that it's likely to pull back at the very least to the T line or to the previous high here, which would be corresponding to roughly the 21 or 50-day moving average by the time it reaches there. So it is bullish but extended, and that is the story pretty much for most of the indexes as well. Let's look at the Nasdaq. Again, this is the Nasdaq weekly, 5 consecutive weeks of positive action, all-time high close, and on the daily, similarly, gap up, dodgy, extended. Next one is Dow Jones Index. Same gap up, kind of spindle top, a bit extended, as you can see here on the weekly chart. And so I expect some turbulence or some consolidation at this point. The next one is the New York Composite Index. It's not as extended or exuberant as the other indices look like, but it is all at all-time high. And if you look at the daily, it has been consolidating over the last couple of weeks and reached the all-time high close on Friday. So it doesn't look like as extended as Nasdaq S&P 500 is, but if they pull back, it's likely to bring the other indices down with them as well. But this one is much more better than the other one. Excuse me, went to the wrong one. Weekly on Russell 2000. So this is the IWM ETF for Russell 2000. This has been a laggard, or it has been consolidating in this zone, the box here, for 6, 7, 8 months since February, and it broke out decisively on high volume just last week. So it shows the mid-cap stocks are also coming to the market participation in this uptrend rather than just the big cap stocks that are in S&P 500 and the Nasdaq. So as you can see, the last week has been consistently high volume participation coming into the mid cap sector, which is a bit encouraging. So because it signifies the broader market participation. So this is quite strong. Next one is Bitcoin. So cryptocurrency, as you know, has been doing really well. And in my VIP portfolio and my personal portfolio as well, have had a good exposure to them to capitalize on this market. last 4 weeks, as you can see, the Bitcoin is pretty much at the same level as the previous top here. It is consolidating. Some people are calling it double top, but it doesn't give any indication that it is a double top. The volume is going down on the sideways action, and that means there are not many sellers out there, which means once it's consolidated, it's likely to resume its uptrend. And by the looks of it, maybe in the next few days, I would imagine. Ethereum is equally strong, and there are certain altcoins that I have bought for our VIP portfolio. The altcoins that are doing really well, in fact, outpacing the Bitcoin and Ethereum returns so far in our portfolio. Let's move on to the stocks, the 10 stocks plus the 8 bonus stocks from the last 4 weeks. And I also gave you 5 focus list stocks last week. We'll look at all of them quite quickly to see how it has performed. So this is Fizz on the daily chart. We added it right around there, but I informed the members, I believe, right about there when it kind of moved out of the 50-day moving average, broke out, retested, and gapped up. And it has been nicely kind of hugging the T line and using the 21 moving average as an interim kind of support, and then zoomed up to resume the bull trend, uptrend. So as you can see, the current price is right at this gap region. So that could act as its resistance. We'll be telling how it moves over the next few days to define the next direction. So far so good. I adjusted the stop loss to capitalize on the profit made. I'm still in the stock, but I have adjusted the stop loss. Adjust the stop loss based on the 21-day moving average, because that has been used previously as a support. So I'm using that as a support region, stop loss region for the stock. The next one is UPSD. Fantastic winners. We've spoken about UPSD so many times, so I won't spend too much time right now. Great winner. It is kind of consolidating after it reached all-time high over 400. So it kind of quickly pulled back, almost kind of a third of the price, nearly 33% pullback here, but it's then consolidating. The earnings are coming up in the next few days. I think it's Tuesday. So it's something to watch. The moving averages are catching up. There has been some breakdowns in the earnings report, post-earnings report in some of the stocks. We'll see one of them later coming up in this watch list as well. So it's time to watch it very closely. But the action so far, because of lack of any major high volume selling, is positive. So I expect, I have a stop loss just around this level, but I expect this to resume its uptrend at least one more time before it kind of reach an intermediate top. But let's see, because I expect it doesn't necessarily mean it should happen. On the weekly, as you can see, it's nicely following the 8-week moving average support. Next one is Affirm. It broke out of this IPO top just in the last 3-4 weeks, and then it grew. It didn't even have much of a turbulence zone right in that region. It consistently is moving up. The earnings for this is also coming up next week. That is the talk of the week. There are lots of companies reporting their earnings this coming week, and anything can happen. It can go up or down, and there can be some wild actions post earnings. So it is important that you know when the stocks that you hold have earnings releases and adjust your position sizing accordingly. Some people don't play the earnings at all. They sell before then and then decide to buy in or not afterwards. Some people have partial profit and hold the other half. It's totally up to you, but have a strategy how you decide to play the earnings. If you have enough profit cushion, then you can decide to kind of try it out and then weather it out, but have a strategy and don't regret afterwards, one way or the other. So Affirm, it's been nicely moving upwards using 21 EMA as support. And again, it tested that support here as well. Although the stock price is moving up, the volume is drying up a little bit. So the earnings is likely to be the next catalyst. If you see, the last couple of weeks has been going sideways. but still above the key moving averages. So the stock price is positive right now. The next direction will be determined by the earnings release in the next few days. This is what I was referring to earlier, post-earnings collapse. So APPS, Digital Turbine. So I had to get out of this stock right around break-even point because I entered this stock around this point, somewhere here, and then had a nice 15-20% move. So I had the profit cushion, so I was holding onto the earnings. And then post-earnings, it dropped nearly 20%. Just in one sweep, all the earnings that, all the profit I had gone in just one day. And because it gapped down and closed below the 50-day, all the key moving averages on high volume, I didn't want to risk holding it further because it's very likely, based on the volume clues, to take a little bit longer before it finds its bottom and then to base and things like that. So this is the potential earnings risks that one is taking if you're holding on the point of earnings release. But it could have gone the other way around as well. So there is no way to predict it. There's another stock which I had struggled with the earnings this last week. I'll show you later. So be mindful of the earnings date and have a reason why you need to hold on to it or not. So this is how the weekly chart looks like. High volume distribution, the 18% drop just in the last week. So this is one of the stocks in our watch list that is not doing as well compared to the market because of this post-earnings release. The next one is Netflix. So Netflix had a negative week last week because it has been consistently going up. 2 out of the last 10 weeks, it's been going up. Sorry, 8 out of the last 10 weeks, it's been going up. So it needs some time to cool off, and it was last week. It just pulled back a little bit, 6%. It's still about 8-week moving average. And there are some high volumes coming up in selling because there are lots of people sitting on profit. So there's some profit taking happening right there. The price point to watch for Netflix is 50-day moving average to see what happens. Whether if the market is strong, it's likely to find some support there and then consolidate. If it breaks down, then there's a character change. Next one is APP, Up11. Again, it's been doing really well after this gap up on company-specific news. It's been going really well, but the earnings is coming up on Wednesday. And it's also sitting right at the $100 resistance level. So although this stock initially kind of gave me kind of a reminder of UPSD at the earlier point of its run, but the resistance at 100, sitting consolidating before the earnings around this point, reminds me of the Digital Turbine, APPS. So I am in this company. I still haven't decided whether how I deal with the earnings yet. I might maybe take partial profit and leave the rest to see how it acts. But that is something to monitor. It's been doing well. So far, it's highly positive looking chart. A little bit extended on the weekly as well after this break of the consolidation zone. So best to kind of book some partial profits and play the earnings after the release next week. The next one is Net Cloudflare. So this had a fantastic run for over nearly a couple of years now. And after this interim bottom here in September, interim low in September, it had a slingshot effect and quick 80%, nearly 100%, nearly 100% move until last week. So it gapped up. It's fantastic earnings, good earnings, gapped up, but then closed the day and the week. So this is the daily chart. It gapped up from close of 201 to 216 open, reached to 218 and finished at 197. So high volume selling, profit taking is happening. It closed above the T line. So it's useful to see how it respects the T line going forward. If the T line is broken on Monday or Tuesday, it's likely to take a little bit more time, maybe come and find some support at 21-day moving average before it kind of cools off, allows the 50-day to catch up, and then resume its uptrend. Or it could be the start of an interim top and correction. The stock has gone too high too quickly. It trades at excessive high valuation. Great company. I have this company in my portfolio and believe in the long term, but the valuation is quite extortionate at this point. So it won't be a surprise if it were to cool down a little bit and find some, and put some medium-term top or so. So it depends on how the next few days go. Next one is JAMF. Weekly chart would show you it's very close to the IPO top right there, not reached there yet. So it's kind of putting a mini handle below the IPO top, and there's a cup and handle kind of forming at this point. Looks a little bit extended on the weekly, but on the daily though, it is setting a nice consolidation zone for the last 2 to 3 weeks. Earnings coming up again on Thursday. If you draw a line there, and any break above 49.10 is likely to be a good breakout to buy with about 46 as a stop loss, if you like to play that. But again, that is the high from IPO at $51 to watch. This is a good looking setup in the market where there are lots of companies that looks quite extended, lots of stocks that looks extended. This is a nice consolidation to have in your watch list. LOB, fantastic winner. Weekly looks like a skyscraper. Ever since it broke out from here at 62, quickly ran up 50% in the last 6-7 weeks now. Bit extended, high volume is accumulating. Lots of people want this. It will be quite healthy for this stock to consolidate here, go sideways or slightly move down to the to allow the moving averages to catch up. But quite bullish chops it up. The next one is JP Morgan. This one is not as strong as the other one. It is still bullish about the key moving averages. It hasn't broken down at all, but then it's kind of consolidating for the last 2 months now, unlike LOB, which has been having an incredible time. So the 10 stocks, and then the 8 bonus stocks that was introduced when we had the watch list 4 weeks ago, nearly now. So SI, Silvergate Capital. So this broke out of this cup and handle pattern just in the last week on high volume. Nearly 30%, right? So that's a fantastic move. You can look at that in the daily chart. If you look at the shorter time frame, so you can on the daily, you can see there's an entry point here, there's an entry point there. So this is strong and bullish, and it still can be actionable. Google, let's go to the weekly here. Google, nice uptrend, 21-week moving averages support, high volume coming up after the earnings, all-time high close, respecting the T line on the weekly support, which is great, which would be corresponding to the 50-day moving average roughly. So it is strong bullish trend continuing on Google. The next one is AMBA, AMBA, continuing its uptrend using T line on the weekly as support. A bit extended, but it is increasingly going up on good volume accumulation there. It'll be nice to have some pullback consolidation to have a strong entry point with risk-reward ratio in your favor. LC, this has been a great winner as well. Looking at the daily, it had gap up here on earnings. It had another gap up here on earnings, and it is now moving sideways to consolidate that strength and the gap here. So that is strong because there is no high volume at all on the consolidation. So that means there are no sellers. There are traders not selling the stock as much at all, which means people want to be in the stock. That is incredibly bullish. So it's likely to resume its uptrend once it kind of finds some support and then resumes in the next few days. Open. It's a bit choppy action on the daily, but if you zoom out to the weekly, so last week I had high volume kind of choppy action as I mentioned, and that is at the back of the news from Zillow, I believe, which was one of the focus lists from last week, which did quite badly. I'll talk about it in a second. But then it quickly recovered the very next day with 15% gain, but consolidating just about their 50-day moving average. Earnings are coming, and that will be quite key to determine whether it follows the fate of Zillow or whether it kind of resumes its uptrend. This one is Coupon. So I alerted the members right around there when it was continuously going down and showing some positive MACD divergence, saying that I'm expecting a bounce, and that it gave us the bounce from this level, around 25-26 mark to $30 mark. It is just sitting above the 50-day moving average. 8 EMA has caught up. 21 is about to catch up as well. The earnings are coming up, so that will be quite key. So far, so good in terms of this nice bounce. And on the weekly, it is about the 8 EMA weekly. So strong green days on the green weeks has been accumulating. So money is flowing into this company in the last few weeks. So if the earnings were good, it's likely to find much more bidding and the price to recover quite quickly after that. So the next one is Royal Dutch Shell. The climate conference is going on, and it corresponded with this drop corresponded with the conference. It also had a quick run, didn't it, on the weekly? So if you can see, once it broke out, 4 consecutive weeks of good gain, and then it's consolidated to the T line on the weekly, giving a dodgy symbol. And so it found some support at the 50-day moving average, good strong bounce the last couple of days, but it's still below the T line and the 21-day moving average. So it's useful to see if it kind of reclaims them and resumes its uptrend. But right now, it's healthy. That is finding the 50-day EMA as a support zone. So this one is Palo Alto Network, consolidating this incredible run after the earnings to the sideways. I think it's kind of expecting the 50-day to come and catch, to find some support. And if the market is healthy, it's likely to catch another bid to go further, and also depending on the earnings in about 10 days' time. So that concludes, that concludes those 8 bonus lists. Looking at the focus list from last week, we had 5: QS, MQ, AbbVie, Coin, and Zillow. So this is QS. It is continuing its uptrend, finding some support there. It's not on this chart, but this candle there on the 4th of November has found some support at the 200-day moving average, simple day moving average. It's not shown in this chart. So that is a resistance right at this level of $33, $32. So it's likely that it kind of comes back, tests the 8 line, 8 EMA, and then resumes its uptrend and breaks about the 200-day moving average over the next few days and a week or so. I'm in this talk, so as you can see, the 50-week moving average, which roughly corresponds to the 200-day moving average, is at this point between $31, $32. So it'll be interesting to see when and how it kind of responds to that point. The high volumes are coming back, so that gives me the confidence that it's likely to find more buyers to increase the price further. The next one is MQ, highly volatile stock on the weekly. As you can see, new IPO. Look at the daily. Broke about the 50, went up quite straight after that, but then finding some resistance and pulled back last week. So this action with increasing volume pullback is not that healthy, but right now it's finding support at the 50-day moving average, which is not too bad. So I'm looking forward to see how the next 2 days respond. Price action is before its earnings on Wednesday. So roughly I'm sitting at the break-even price right now. Next one is AbbVie, pharma company. So earnings gap up of 4%, and then continuing to increase in price without any kind of give back of this gain. So this is incredibly strong price action, and that's also reflected on the weekly. So great company. If you want a bit more quieter, less volatile company, it also pays some nice dividend as well. So this looks like a great candidate to aim for in your portfolio. Coinbase, playing on the cryptocurrency sector. A nice consecutive 5-week of gain with high volume. On the daily, it's kind of consolidating. It may consolidate for 1 or 2 more days. Earnings coming up on Tuesday, and so that will likely to have some moments. And I'm incredibly positive on the stock and the sector, and I'm expecting it to reach the all-time high in the next few weeks. But depending on the earnings, of course. So Zillow, right? This is what I was talking about earlier. It had a descending wedge breakout. Let's go to the weekly. No, daily is better. So wedge created from this top there and this bottom here, and there was a wedge breakout. Nice 10% move on 2 days, and then the company announced that they're changing the business model and offloading quite a lot of inventory houses for cheaper prices, and the earnings also showed some unexpected kind of losses and slowness in the company's revenue and sales, and that had resulted in nearly 40% drop over the last 5 days. So this was the clue there. So strong, high volume closed below the key moving averages the day before the earnings. That was the clue to get out, and the earnings had a gap down of 25%. These things can happen. In most situations, there will be some hint like these the days before the earnings. So that is to be watched as well. So that's why for those stocks that has earnings release due over the next few days, it's important to watch how they respond on Mondays and Tuesdays before the earnings release. Okay, moving on. So I've got a couple of stocks as a focus list for this week until next week. So this is AMAT. It's a semiconductor company. If you look at the weekly, it's much more clear. So it went sideways from April onwards, and then consistent volume for the last week, and it broke out of this previous high and finished at all-time high. MACD, though, hasn't reached positive territory yet, but almost there. So this is quite positive price action. However, earnings are in about 10 days' time, so that is to be watched. The next one is Skyline Champion Corporation. Earnings, fantastic earnings, gap up and consistently going up. It is a bit extended on the daily. If you look at the weekly, though, nice consolidation for 4 or 5 months. High volume. MACD has turned positive on the weekly. So this looks really fantastic and bullish on weekly, slightly bit extended on the daily at this point, but a good fundamental and reasonable fundamental and good technical presentation. Trupanion. So this company deals with pet insurance, and it's a bit volatile, as you can see on the weekly. It gave a W pattern and broke out of that middle arm here right there at the last week on higher volume and closed at all-time high. So this is a positive action. If you look at the daily, and as you can see, there was a mini handle there. It broke out of the handle on Thursday, and then it followed through with even higher volume on Friday. Just for disclosure, I have this stock in my investment portfolio, long-term portfolio as well. I bought them many months ago, and it's been quite volatile. I managed to hold them through that volatility, and it's kind of moving up nicely at this point. So from the breakout point of view, it is at the all-time high, and it gives us another entry point right here if you're prepared to have some volatility. I wouldn't be surprised if it were to pull back again and have a VCP pattern, but it depends on the market. There are higher volumes coming up on breakout, so it may get some more bid and continue to move up from here as well. Next one is Airbnb. So daily had a so the day before yesterday, it had a fantastic earnings and then gapped up nearly 13% and closed about $200 price mark. If you draw a horizontal line there, and it broke out of the descending wedge right about there and increasing volume the day 2 days before the earnings. That was the clue. So you could have got there earlier, and I did alert members about this in VIP portfolio, and we had a nice move right there. So this can still be actioned. If I look at the price action, volume and price action, it's encouraging that more upside is about to come imminently. So I'm optimistic about this chart. So there you go. That completes the watch list, the bonus list, and the focus list for this week. I hope it was useful. Play safe, know when the earnings are for your companies, and manage your risks. Take some partial profits if your stocks are a bit extended, and if you want to play the earnings game. Or it's not a bad idea at all if you were to take all of them off the table and then see how the earnings reaction is before you reconsider. Okay, I see you next week. Next week would be the second Saturday of the month, and we will have our members monthly meeting with Q&As and some presentation, 10 o'clock UK time on Zoom, the usual link. So I see you there. Until then, happy learning and successful investing. Bye-bye.